Do you dream of building wealth and seeing your money grow, but feel stuck because you think you need thousands to even start investing? What if I told you that's a myth, and I personally began my investing journey with as little as $100? Most people are intimidated by the stock market, believing it's only for the rich or those with massive savings. But the truth is, the most powerful thing you can do is just start, even with a small amount. The magic isn't in the initial sum, but in the consistent habit and the power of compounding. In this video, I'm going to share my exact step-by-step journey of how I started investing with just $100, and the actionable strategies you can use to do the same, starting today. And trust me, the biggest secret isn't about picking winning stocks. It's about a simple, repeatable process that anyone can follow. Before I reveal how I turned a small start into significant growth, please take a quick second to hit that like button and subscribe to Finance Butler for more practical investing tips. And share this video with anyone who believes investing is out of reach. And as always, I'd love to hear your thoughts. So leave a comment below and tell me, what's stopping you from investing today? My journey from $100 to growth, the mindset shift. When I first thought about investing, all I saw were images of Wall Street titans and complicated charts. I had minimal savings, and the idea of putting real money into something I barely understood felt terrifying. My first major hurdle wasn't finding the money. It was overcoming the belief that $100 wasn't enough to make a difference. The first critical step was realizing that the goal isn't to get rich quick with $100. The goal is to start the habit, to learn by doing, and to harness the power of compounding over time. $100 was my entry ticket to a lifelong journey of wealth building. I stopped seeing $100 as just $100 and started seeing it as my first step towards financial freedom. This mindset shift was crucial. It turned a daunting task into an exciting experiment. What's your biggest mental block when it comes to starting to invest? Step 1. Finding the right beginner-friendly platform. My biggest challenge with that first $100 was figuring out where to put it. Traditional brokerages often had high minimums or confusing interfaces. I needed something simple, low-cost, and accessible for small amounts. I specifically looked for platforms that offered fractional shares and no commission fees. Fractional shares mean you can buy a piece of a stock even if the full share costs thousands. No commission fees mean your $100 isn't immediately eaten up by trading costs. Some great options I considered, and that are widely available today, include apps like Fidelity, Charles Schwab, or Vanguard, which now offer fractional shares and low minimums, or even robo-advisors for super easy diversification. This made it possible to buy a tiny slice of a well-known company or an index fund. Have you explored beginner-friendly investing apps that allow fractional shares? Step 2. Choosing my first investment, simplicity over speculation. With only $100, I knew I couldn't buy a diverse portfolio of individual stocks. My temptation was to try and pick the next big thing to quickly multiply my money. This is a common beginner mistake and a recipe for losing that initial $100. Instead, I opted for simplicity and diversification. An S&P 500 exchange-traded fund. An S&P 500 ETF holds small pieces of the 500 largest companies in the U.S. by buying one share. I instantly got diversified exposure to the entire U.S. stock market. This meant I wasn't betting on one company. was betting on the overall growth of the American economy. It's a low-risk way to get started and historically provides solid long-term returns. Are you trying to pick individual stocks, or looking for a simpler, diversified approach like an ETF? Step 3. Setting up automation. After that initial $100, the real magic happened through automation. I knew that consistently adding small amounts was far more powerful than trying to time the market or save up large lump sums. I set up an automatic transfer of $25 from every bi-weekly paycheck directly into my investing account. This felt like a small, manageable amount that didn't impact my daily spending dramatically. By setting it and forgetting it, I removed the need for willpower and constant decision-making. The money moved into my investments before I even had a chance to miss it. This is called dollar cost averaging, and it averages out market fluctuations over time. Could you automate just $25 or even $10 from your next paycheck into an investment? Step 4. The power of ignorance and long-term vision. Once my automation was set up, I deliberately stopped checking my portfolio daily. Beginners often panic at market dips, which can lead to selling at a loss. I embraced benign neglect. My focus wasn't on short-term gains, but on long-term growth and consistency. I understood that market fluctuations are normal, and time in the market beats timing the market. This allowed compounding to work its magic without my emotions getting in the way. My tiny contributions slowly but surely started to grow, and over years the returns really began to accelerate. Are you constantly checking your investments, or are you focused on the long game? Step 5. Increasing contributions over time. As my income grew, even slightly, I made a conscious effort to increase my automated contributions. When I got a raise, half of that raise went straight into increasing my investment contribution. This is the fastest way to accelerate your wealth building. So you earn more, your pay yourself first amount should also grow. This ensures that lifestyle inflation doesn't eat into your potential savings. By consistently bumping up my contributions, my small starting point quickly snowballed into a substantial portfolio. When was the last time you increased your investment contributions? Could you do it after your next pay raise? The big takeaway: just start. The biggest lesson I learned from starting with just $100 is this: the barrier to entry for investing is much lower than you think. The most important thing is to simply begin. Don't wait for the perfect amount or the perfect time. Start small. Automate your contributions. Choose simple, diversified investments like ETFs and focus on consistency over time. That $100 isn't just an investment, it's an education, a habit builder, and the first step on your path to financial freedom. If you caught only the end of this video, you missed the crucial insights into how I overcame the mental blocks and the exact platform and investment choices I made with my first $100. Go back and watch from the beginning to unlock these empowering steps. If you're ready to take that first brave step and start investing with whatever you have, check out my next video linked right here, where I share a step-by-step guide to opening your first investment account and making your very first $100 investment starting today. Don't forget to like this video, share it with someone who needs to hear this message of possibility, and subscribe to Finance Butler for more real-world financial strategies. And tell me in the comments, what small amount will you commit to starting with today? Let's build that wealth together.